There's a common misconception that in order to buy a home, you have to put at least 20% down. However, that is not true. There are tons of different home loan programs out there that can get you in for as little as 10, 3.5, or even no money down. And I mean that, no money down. However, each one of these has their own rules and guidelines that you have to go by. Some of you may have heard these be called first-time home buyer loans, USDA, FHA, thrown around those terms. However, it is not true that you have to be a first-time home buyer for some of these loans. We're going to go into this today. Hi, my name is Cheyenne Blue, and I am a real estate agent here in Lake County. This is actually my first video since my new brokerage switch. I was working over at Country Air, but now I am over at Better Homes and Gardens Wine Country Group, and I am so excited to be started there. I wanted to make this video for anyone that is thinking about possibly purchasing a home in the future, so that way you would get a little more education on what home loans are out there and something that might be the best fit for you. That way you know what you're getting into as you're going into the mortgage with your new home. So first off, what exactly is a no down loan? Well, basically it works either one of two ways. First, the mortgage is entirely provided without a down payment, or there is a second loan that's done that provides the down payment, so you have a second mortgage, or you can also get a grant that helps cover your down payment. These same items can also help cover closing costs and things like that. Now, closing costs, they're different than your down payment. See, the down payment goes towards the overall principal of the home, whereas your closing costs, that's more along the lines of paying the mortgage person, paying for the inspections, paying for appraisal, and other fees along that line. So there is a mix of both government and private loans available for those that are looking into doing the no down payment loans. And some of the government ones include the VA loans, which are for veterans. There's the Department of Agriculture loans, which are the USDA loans. And then there's the Federal Housing Authority loans, which is FHA loans. For the sake of this video, we're actually going to start out with the VA loans. The first loan I want to get into is the VA loans. This is a huge benefit for our veterans to get into housing a lot easier. These were actually intended for the military veterans that don't necessarily have the opportunity to seek large incomes in order to put down on a house, and that way they can also get into a home with fewer hassles. The main qualification for this loan is they do have to be a qualified veteran of the armed services, so anything from Air Force to Marines to Coast Guard, things along that line. And the borrower does need to have a at least decent to good credit history and financial accountability. So you do still have to have your proof of income. You have to have a decent credit score, and the lower your credit score, it doesn't mean that you can't get the loan. Technically, with the VA loans, you can get into a house with pretty much any credit score. However, that is going to significantly affect both your interest rate as well as if you end up having to bring money into this situation. I've had some people where they did use a VA loan and they had really, really poor credit, and they were still able to get a home. However, they did require having the down payment, and there was also harsher restrictions on the type of house that they can buy. So if you are a military veteran and you're interested in using your VA program, you can use it if you have bad credit. It's just you are going to have to come up with that down payment. However, if you do have good credit, then you can take advantage of the no down payment. Another thing to keep in mind, though, is no down payment does not mean no closing costs. A lot of times you are going to have to pay the closing costs, but you don't necessarily have to pay them. The way that this works is when you get pre-qualified, you're going to find out how much you're going to need to bring to the table in closing costs. Once you find out how much you need to bring for closing costs, you can actually ask the sellers in your offer to provide those closing costs. Now, not all sellers are going to do this. However, with the way that the market has changed, the sellers are a little bit more motivated to sell and are more likely to work on a arrangement that it's kind of more of a win-win situation and help provide the buyers those closing costs. So some of the benefits when it comes to using a VA loan is typically you have lower overall borrowing rates. And not only that, but you typically don't have to deal with things such as mortgage insurance or super high closing costs because they actually have a cap on the closing costs. So overall, you do get a lot of benefits from VA. However, one thing I do want you to keep in mind is some of the drawbacks from VA is when you're looking at buying a home, a lot of times their criteria, well, really most of the time, their criteria is a lot more strict because they want to make sure that when a buyer gets into the home that there's nothing that they're going to have to repair. So they want the pest report to be pretty much clean. So basically, if you end up getting a pest inspection and it comes back and there's certain repairs that you wouldn't mind doing yourself after the close of escrow, VA will typically not allow for that. They want all those repairs done before the close of escrow. Another downside to this program is because you do have to deal with the federal programs and everything, your loan process can also take longer than the average loan. The next home loan program I want to talk about is USDA loans. Now, with USDA loans, what these are is they're loans that are made by the U.S. Department of Agriculture. These loans are specifically for rural home ownership. These home loans are made with the incentive to get people into the more rural areas and help populate those areas, as well as get people into agriculture communities to help build on the agriculture. Lower income borrowers are the main group when it comes to the USDA program, and that really is who it's aimed at. Now, retirees can also be eligible depending on their income status. See, with USDA loans, you do have to be within a certain income in order to qualify for these. Otherwise, you may end up making too much money in order to qualify for a USDA loan. So what are the requirements when it comes to a USDA loan? Well, first, you have to be in a rural area. These are not available for anything that's in like a suburban or a city area. These are specifically for rural-based communities. Large homes are not allowed under this program. All homes have to be 1,800 square feet or under, and the overall market value has to be less than the local average. And of course, the borrower's income cannot exceed the income standards that go with the USDA programs based on their specific area. Benefits of the USDA program is that, yeah, you can get into a house with no money down without being a veteran. Your property is financed 100% and it's guaranteed by the federal government. However, disadvantages is you do have limitations as far as your property size and value and what your income is. All right, so let's say you're not a veteran and you don't live in a rural area, which if you're watching this and you live in Lake County, good news. You're in a rural area. You should be able to qualify for a USDA loan as long as you fit those income requirements. However, if you're watching this and you happen to be in the city or a suburban area, yes, this video can help you too, and these are the loans that you want to look into. The first loan program I have to talk about is the FHA loan. The FHA program technically is not a no down payment option unlike the other programs that we were talking about. There is a down payment element involved, but it's much lower than the typical market requirements. Typically, it's closer to around 3.5% down. The other big element is the overall closing costs and fees and everything is actually a lot lower than what some of the other loan programs can be. The mortgage process for these loans is also typically a lot quicker. So who is eligible for these FHA programs? Well, the most common applicants that we see are first-time home buyers who are trying to get into homeownership but are struggling with the big down payment. They may have savings but not enough to meet a conventional home loan. Also, those that maybe don't have the best credit score or they don't have that great of an income, they also fall under the help of these FHA loans, where a lot of the private investors a lot of times would just look away. So what are the program requirements when it comes to FHA? It requires a 3.5% down payment for applicants with a credit score of 580 or higher. However, if you are lower than that, down to 500, then you can still get into a home, but you're going to want to put down a 10% down payment. They'll make you put down a 10% down payment. The property will also have to be appraised by a special FHA appraiser. Now, this appraiser, you don't have to go searching out for yourself. It's actually just randomly assigned for you when it's time to do the appraisal. On top of this, you are also going to have to pay the mortgage insurance. You'll have to have a steady income source and proof of employment of at least 2 years by the same employer, be over 18 years old, and will use the home as a primary residence. And just to let you know, you actually don't have to be a first-time home buyer in order to qualify for an FHA loan. You can actually qualify for the FHA loan as long as you make certain requirements, depending on your situation, how long it's been since the last time you owned a home, or the last time that you lived inside a home. So it's definitely a case by case basis. So even if you have owned a home in the past, you may have the opportunity to still take advantage of the FHA program. The downside with using an FHA loan is that the properties eligible to be considered, they have to be below the FHA value levels. The FHA program is not available for every home on the market, and that can rule out a lot of regions, especially here in California, where our average home price can tend to be higher. Here in Lake County, it's not so much, but overall in California, yeah. Another benefit that I would like to mention with the FHA loans is typically when it comes to repairs, you can a lot of times end up waiting for repairs to be done later, or you can have a little bit more negotiation room when it comes to repairs, at least when you compare it to the other two loans. Okay, so you don't qualify for USDA, you don't qualify for VA, you're leaning more towards the FHA, you find out you do possibly qualify for the FHA, but you're still having troubles with that 3.5% down, there are other programs that you can use along with the FHA program in order to make it to where it's virtually 0% down. And here's some of what those programs are. Here in California, we have different grant programs in order to help people with that down payment or closing cost assistance that's holding them back from getting into homeownership. One of those programs is the CalHFA My Home Assistance Program. I've actually helped a few different buyers with this program. It's an incredible program. They actually offer their applicants a deferred payment junior loan up to 3% of the purchase or appraised value of the mortgage property in order to help make the down payment or pay the closing costs. Next program would be the GSFA Platinum Program. This was created by the California Golden State Finance Authority, and it provides low to moderate income California buyers with down payment and or closing cost assistance to help them achieve their goals with purchasing a home. What they can offer you is typically based on what your situation is and what area you're in. Another thing I want you to keep in mind is depending on where you're at, what city you're in, what county you're in, each area can sometimes offer their own programs. So definitely look into your local area and see if there's any local programs that can help you with down payment assistance. A lot of times those programs can also be better suited for the area and have different income and other guidelines in order to help the people that are interested in buying in their area. With all three of the actual loan programs, you end up having to pay the closing costs. Now, you don't always have to pay the closing costs. Yes, you can use the grants for one. Another thing that you can do is you can actually ask the seller in your offer to cover whatever closing costs you have. So you can put down whatever it is you have and then ask the seller to put down the rest. Or you can even ask the seller to cover all closing costs. One of the advantages that buyers have right now is since the market has shifted, it's definitely become a little bit more towards a buyer's market, especially in this area. So you have a lot more wiggle room when it comes to negotiation. Another thing is too, the sellers, a lot of them actually have a lot more equity than we have seen in the past, which does allow the sellers to also have a little bit more wiggle room when it comes to negotiation, because you can actually take a loan out against the house in order to pay for repairs, or you can put the credit from the sale of the house towards the closing costs. So that way it really ends up becoming a win-win situation for both parties. That's something you guys really should take advantage of, and I really hope that this video has helped you. and helped you to kind of understand the loan programs a little bit more. If you have any further questions, feel free to reach out to me. I also do have some really helpful home buyers guides and other things along that line. I can help you through the pre-approval process to see what loans and down payment assistance programs that you may qualify for. So, yeah, I hope you guys all have a wonderful day. Feel free to contact me at 707 413 8143. Until next time, have a good one.